Mondelez stock is higher right now on an earnings beat just reported. North American revenues up double digits in the first quarter, and also we saw organic revenue growth almost double what analysts were expecting at 4.4%. Mondelez CEO Dirk Van de Put joins us now for a first on CNBC interview. Dirk, good to have you here. Welcome back.
Thank you, Sarah. Good to be here.
So it looks like the sales trends were stronger than Wall Street was expecting. What drove it? What parts of the world, and what are you seeing from consumers?
Well, if I look around the world, the good thing about this quarter for us is that we see growth in all our regions. In North America, very strong. Europe, also quite strong. But even in EMEA and in Latin America, we had a very good quarter. And the second quarter was a little bit slower, but all regions have come back. If I look at the consumer and our different product categories, our biscuits and chocolate consumption remains very high. And even chocolate, which is consumed also a lot in travel and so on, even if you include that, results are quite good. The one category which is really consumed on the go, gum and candy, that's a little bit affected by, or quite a bit affected, I would say, by the consumer staying more at home and being less mobile. But overall, we see the consumer snacking more than they used to, particularly at home, and that is helping our business.
I mentioned you also provided guidance, expecting organic sales growth of 3.5%. How do you look into the future of the sustainability of these types of numbers without knowing where the virus is headed, whether we're going to get a vaccine, whether we're going to get more stimulus, all of those wild cards? What gives you confidence in the view forward?
Well, the good thing about this quarter, and in fact about all quarters this year, is that we've been able to increase our market share. And so if you look at the categories, the categories that I was just mentioning that we are active in, over the times and even in recessions, they do relatively well. So let's say in a serious recession coming at us, our categories could slow down to 2% growth per year. With the market share increase that we've been showing, I think we can deliver a 3% plus growth even next year. And that is in line with what we've promised our investors. That is our long-term algorithm as it relates to our net sales. And we see that possible at the moment. We also have been working quite hard on our costs and putting in place cost reduction activities. So even as it relates to the bottom line, our bottom line this quarter was particularly good with double-digit growth. But we expect going forward, where we have promised that we would be mid-single-digit growth of our bottom line, we think that is sustainable.
What are you seeing, Dirk, right now in Europe and really in recent weeks as they are headed back into lockdown mode in terms of stock-ups and staying at home?
Yeah, the European consumer during the first wave didn't stock up as much as the North American consumer. But obviously, going into lockdown has a number of effects. The consumption at home, anything at home, will become more important. Cooking, but also snacking, biscuits and chocolate, as we saw last time. But the stockpiling in Europe, the first time, was even not as high as in the US. So I expect the stockpiling to be limited this time. But it will severely affect the behavior of the consumer. So as I said, everything at home will be important. They will do more and more of contactless life. So buying a lot online, e-commerce will boom. I think they will be very focused on hygiene, immunity, keeping their weight under control, all the things that they are worried about, and they want to feel safe. So I think what we've seen in the past months is going to be reinforced all over again with these lockdowns in Europe.
Shepard Smith here. Thanks for watching CNBC on YouTube.